what part of passive investing do you think needs to die?
That you're going to do a deal and you're going to be rich. You're going to put $50,000 in and get $1.5 million back. And that's just so far from true. I want to see them have some money into it. So if they're not having any money into it, I'm probably not going to do it because, it's easy to take risk with other people's money because you're not out of anything. Once I have a phone call with them, I'm looking for a warm fuzzy. I'm looking for a consistent messaging. They talk about the returns, but really it's a return of capital. Returning back my money, yes, it's a return, but I'm looking for the growth on that money.
Welcome back to the Invest Clearly podcast. In today's episode, we sit down with Terra, an LP who balances a full-time job, parenting, and growing a passive investment portfolio. She shares how she tracks sponsor performance, how her evaluation process has evolved over time, and what it's like making investment decisions without a partner to gut check ideas. We also talk about liquidity planning, portfolio concentration, and lessons learned from deals she chose not to invest in. If you're managing limited time and capital across a crowded landscape of private offerings, this conversation offers a grounded look into one investor's approach. Let's get into it. The views expressed in this podcast are those of the individual guests and do not reflect the opinions or recommendations of Invest Clearly. This podcast is for informational purposes only and should not be considered investment advice. The appearance of a sponsor or investor on this show does not constitute an endorsement or a warning. Invest Clearly is an objective and neutral platform. Always do your own due diligence before making any investment decisions. For some reason, every time Terra and I connect, there's like a major life point happening. The first time it was a hurricane going through Houston. The second time you were having a baby, and now it's like, hey, let's connect on like a more like a normalized environment here, No, but it's great. Terra, for those listening, I'd love for you to just take a little bit to introduce yourself. I'd love to hear about your background. You can talk about Power Pool Fund. What got you into real estate investing. Are you a full-time LP? Do you work while you do this? Really just give us a bit of an introduction.
Yeah, so I'm Terra Padgett. I'm the founder of Power Pool Fund. And so I am a busy professional. So I do work full-time. I'm currently still on maternity leave. I just had the baby, so I'm currently still on maternity leave. But
congrats, by the way. I don't know if I said it. I think we've talked great.
Yeah, thank you. So I'm a commercial insurance broker by profession, and my expertise is working with real estate developers, owners, property managers, just on the commercial side. So writing their property and liability insurance. So I've been doing that for the past 17 years and enjoy it, find it fascinating. Most people don't find insurance fascinating. I do. Yeah. But that's what I do. That's kind of what I call my 9 to 5. But then I say my 5 to 9, my 5 p.m. to 9 a.m. is my real estate entrepreneurial side and the real estate ventures and in the finance space where I'm trying to just grow and build just a massive portfolio, both from, we have some single family assets, but then also more so recently, then we'll get into this as we talk, as an LP, and because I have 3 small boys, 6, 4, and now, 3 months. So I my time is like most people is your most valued asset. And so I'm starting to build heavily into that LP side because I don't have the time to learn all the ins and outs of every single asset class and every single market and every which way of how to asset manage every single type of property. And so I am definitely an LP and really growing that portfolio aside from the single family portfolio. So commercial insurance broker by profession, real estate entrepreneur by passion.
Awesome. And I think you said you are in about 12 positions across
Yeah, over
the board,
a dozen.
LP
So
positions?
14 to date.
Okay, fantastic. And are most of those through Power Pool Fund or how did you get into all of those?
So some of them are through the investment club Power Pool Fund. Some are through a club that I'm also a member of in another investment club. And then some are just direct on our own that my husband and I just invested in directly on our own. So a mix of both.
Awesome. Fantastic. And then at a high level, how are they currently performing across the board? You don't have to get into specifics, but just like some are good, some are bad, whatever you prefer to share.
Yeah. So a lot of them, they are just in there. I'm probably started investing in these deals around early 2023. So we're probably about 2 years into a lot of them. And so they're just in their business plan execution mode. So none of them have come back. And when I look at the quarterly statements or distributions and things like that, none of them have said we need a capital call or anything like that. So to date, They're all just in the process of executing the business plan. And so I'd say let's chat this time next year because a lot of them are anywhere from 3 to 6 years. So once we cross over that 3-year mark, and if we start seeing some exits, so I'm proud that my portfolio and the time that I really started really focusing in on LP was right around the time where multifamily, which has been kind of the darling of real estate, kind of started to have its struggles. So I don't have a whole ton in multifamily, but yes, absolutely. I definitely have multifamily. So that'll be the most interesting one to kind of see how things shake out. You know, a lot of them are distressed financially. Maybe not so the asset itself isn't, but just the debt structure and things like that are stressed. And so we'll kind of see how it plays out. But since, I've been extremely aggressive in accumulation mode over the past, 2.5 years or so, really trying to, ramp up the LP side from the single family side that I'd had prior, to really just sit back, relax, and let the dough roll in, so to speak. And so we'll see how it goes.
That's awesome. That's great. So yeah, a little bit of multifamily. What does the rest of it look like? And do you have, in this massive acquisition phase or kind of growth phase, are you focusing on one asset class over another?
No, diversification. So that diversifying across sponsors, diversification across different types of deal structures, whether it's debt structure, equity structure, preferred equity, deals, things like that, funds and single assets. So I like to put the eggs in a lot of different Easter baskets, so to speak. And so with that, yes, we've got some debt deals we've done both on like a debt fund, then also just loaning to someone that was doing a flip project and being a private money lender in that deal. We've got some equity positions where we're just common equity. Then we have some preferred equity positions. So personally, I like funds. I'm not one that has to be, I want to see, some people say they want to know specifically what this asset and whatnot is doing. I like the diversification of a fund because if, let's say, I'm in an industrial real estate fund, like if one asset has a move out or whatnot, that doesn't take the whole deal, it doesn't take the whole portfolio. So I like having it spread out across a lot of different assets, and why we partner with operators and vet the operator on the front end is because, even in some, like one I think we're doing is a blind fund, where it's just, this is what we're going to invest in. But that's the point of vetting that operator, that I'm trusting them to be able to select and choose that right asset. Because Lord knows, I don't know everything there is to know about multifamily.
Sure.
I don't know everything there is to know about industrial. And I don't need to know everything there is to know about it. I need to know enough to be dangerous, to know enough to make an informed decision of where I'm wiring, my money to and what it's going to be working as or in. But that's a big part of the operators that you partner with, is so, you trust that they're going to make and be good stewards of your capital and be able to make proper decisions so therefore it's a win-win for all. Like they're making money, doing what they do, we make money doing what we do, which is being financial partners, and it's a win-win for all. So it's a good mix of different stuff. So industrial, have a land deal that I like, that one's going really well. That's about 16%, annualized return that's been paying. So a land fund that I'm invested in. Let's say, of course, the multifamily. The coolest one really, though, is they do a lot of different stuff. But one thing that I saw pop up that they put into the fund is like a luxury car garage. And so I'm like, oh, like people with luxury cars and boats and stuff, or, those folks that have that, apparently, they need that space to be able to store it in those types of things. So that's one asset that's in the fund, but they do different land entitlement and development and then sell it to national home builders so they're just taking raw land and going through that arduous, entitlement process and developing it, getting ready for it to go, to go vertical. So it's really cool seeing their updates and the pictures and stuff. And then when they say, hey, we're buying this or investing in this, building this luxury car garage, I'm like, ooh, cars and boats, and send pictures of the Ferraris and all that stuff that's in there. So it's cool to kind of see, the different things that where my money is being put to work. When I call my employees, Benjamin Franklin and Ulysses S. Grant and Andrew Jackson and George Washington, they're out there doing a lot of good stuff. So
that's fantastic. That's awesome. When I was living, I lived in Fort Myers, Florida for a little while, and before I left, that was actually like a big thing I saw popping up, where I think they branded them more as like man cave. It was like a flex industrial unit that they were leasing up to people who had these cars and boats and on the top level. On the top level that would typically be an office, they made it almost like a hangout spot. And I mean, they were flying off at a certain point in time. So that's pretty cool that you brought that up, because I'd never seen it before.
Yeah, neither me. And so I kind of like seeing those different asset classes, to where just thinking outside of, like I said, multifamily, or thinking outside of, just not now, but office. Maybe not now, but 10 years ago. Yeah.
Yeah. I mean, so I'm in a unique position where I get to see like sponsors across the board, and we do get a lot of people in that like request to add additional funds or asset classes to invest clearly. And we, I think I've talked about this on literally every episode so far. But like, there are quite a few that we're not there yet. We're just focusing on like the real estate stuff. But people have, I've heard of somebody that syndicate like horse racing. I know one guy asked me to put on a whiskey barrel fund. Marinas are coming on. Assisted living's coming on. So it's like pretty interesting that it's getting beyond like this core, like niches are kind of becoming more and more widely, I guess, asked about, which is cool. But
the riches are in the niches.
yeah, that's what they say, right? There's somebody I talked to recently that does like wedding venues. Like they're not quite hospitality, but they do like wineries and wedding venues and things like that, which is pretty interesting. Okay, two questions based on that last statement. So you talked a lot about vetting operators and then, a lot of opportunities that you're invested in, but also considering. Walk us through your process to vet the operator and then where you're getting your deal flow from currently.
Yeah. So the funny thing that I always joke and say, because we're talking about this, if I talk about a luxury car garage, on your feed, you'll probably see something about a luxury car garage. Big Brother's always listed with our phones, our computers. Sometimes you think about something and all of a sudden it pops up in like a TikTok feed or whatnot. To the first part, where are we finding or how do I vet the operators? So the first step for me truly is once I have a phone call, a lot of times it's their investor relations contact. Once I have a phone call with them, I'm looking for a warm fuzzy. I really am. I'm looking for a consistent messaging. So when we're speaking, if I ask a question, then ask it later in a different way, is the message consistent? And do I just, it really is do you know, like, and trust and kind of, you're marrying them for at least 3 to 6 years, with the deal or however long. I'm really looking for a warm fuzzy. Do we vibe well? Do you sound competent in this space? Or are you just, kind of salesy and, we can laugh all day and have good conversations and talk basketball and talk the weather and talk whatever else is going on. But, are you competent in this space? Do I get a good vibe that you actually know what you're talking about and the structure that you're in? I just remember one operator that I talked to, he wasn't very charismatic. It wasn't just like the most laughable fun. I mean, I like to make jokes and have a good time. I mean, we don't have to take everything so serious in life. So I work in insurance and it's always like, the apocalypse is happening. But like, we can find some laughter and some humor and some fun into what is outwardly thought of as a very boring, I'd say, business, So with that, he wasn't very, very charismatic with it, but why I just had a knack for him. He knew what he was talking about. He was very spot on. He spoke really high level on stuff, which I appreciated. I definitely appreciate it, where it's not just kind of fluff and kind of anecdote and kind of the same stuff you hear, you invest is not guaranteed returns, da 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 da. But, he really spoke from his own personal experiences. And so even though we weren't, laughing and joking, he wasn't really, as a charismatic kind of sales type of person. But I feel like I just had a warm spot in my heart for him because I'm just like, and I don't really know his age. It was just the voice that I heard. But I was just like, I like this guy. He really seems really invested in what he's doing. And, he was kind of on the back end, I think, because he mentioned he'd worked somewhere for, 30-something, 35 years. So I'm like, anyone that's been in a business 30, 35 years, you're probably not 30 years old. So, I just thought that, he really was invested in what he was doing, the company that he was working for, and saying he was bringing his family members in to invest in them and stuff. And so I really just got a warm fuzzy for him. He could have been pulling the wool over my eyes and just joshing me all day long. I don't know, but he did a great job of it. So we'll see. I haven't invested with them yet, but anytime their deals come through my inbox, I am definitely looking at them and I'm considering them. And so I think that where I take that story is that first, few phone calls that we have, that interaction to where they get the green light. So deals that they come through don't automatically just go to the trash because, I just thought they were jerks and just, they were just kind of just talking hot mess. Who knows what they're really doing out there. But, I'm considering their deals just because I liked them and I got that good warm fuzzy that they knew what they were talking about. He was competent, that the company had been around for a while and just all the things that we dialogued about. We had very relatable conversation.
Mm-hmm. Cool. Very cool. Yeah. The initial differentiator, essentially. Yeah. This episode of the Invest Clearly podcast is brought to you by Scale IR. If you're raising capital, the hardest part isn't just generating leads. It's turning those leads into committed investors. That's where Scale IR comes in. Scale IR transforms your investor engagement process with their proven solutions that optimize lead qualification, accelerate investor conversations, and drive higher conversions. From seamless CRM integration and intelligent workflows to expert investor qualification specialists who handle your initial discovery calls, Scale IR gives your team freedom to focus on closing deals. If you're ready to scale your investor relations and capital raising effectiveness, visit scaleir.com to learn more and book your strategy call today. Scale IR. Engage smarter, convert faster. And so when you mentioned that was the first call, do you how many, do you have like a framework of how many calls you typically have before you invest? Or is that just, hey, I traditionally have an intro call, and then a deal comes through, and then I take it deeper? Like, what does that process look like?
So it's different for different operators, and I say different operators meaning larger or smaller because and depending just on how they operate. But I really a lot of times defer to them unless I'm specifically looking for some specific asset class to invest in. So I'm then maybe reaching out. Hey, I know you're in this space.
Sure.
What you're looking at their portal. What do you have open now, or what's going on? But for more times than not, it's more of an initial call, and then I kind of ended with, I look forward to talking to you again. And that's kind of, let's see what they do. Is it just
Sure.
initial call because they met the requirement for the SEC? Do you have to establish a relationship with them? So whatever that means, is it just a 30-minute phone call? But I like to see, how do they follow up? When do they invite to, if they're coming to town and doing, an investor roadshow? Are they reaching out? Are they, reaching out with phone calls or emails? Hey, heard you were
Yeah.
pregnant, or heard you just had the baby. Are they building that relationship beyond just that initial, okay, well, I got to quote unquote establish a relationship with you, which may be a 30-minute
Yeah.
phone call per the SEC, but are they continuing up? So really the ball is in their court to do that and to follow up with the LPs, with the investors that they're trying to raise the capital from. So I really defer to them, and we see how it goes. Do they follow through and follow up on that or not?
Yeah, that's great feedback. That's awesome. And then deal flow. How are you finding these GPs? How are you accessing, like, where is that all coming from?
So initially, when I started out with the platforms. So like Realty Mogul being a platform, Equity Multiple, Cadre was another platform
Hmm.
that I think they sold, like Yield Street or whatnot. There's a lot of different platforms out there, and so I just started looking at those platforms initially. Is where I started, finding deals and finding operators and sponsors and looking at that. And then once you kind of get into the space and either you invest in a deal or two, then you start meeting people. I've attended conferences and you start talking to people and you start asking, well, who are you doing deals with, and who are you putting your money with? And then you just start kind of networking and talking to folks. And then again, the more you talk about it, then you start seeing stuff on your feed. And then,
Sure.
you start seeing stuff on Facebook or Instagram or whatever, different feeds. And so initially I started out with utilizing the platforms. And then from there, it just kind of snowballed. And then even in some Facebook groups that I'm a part of, someone, may post like, I just invested with them and, I'm having a horrible time. Or,
Right.
I invest with them and I am having a good time. And then I heard about Invest Clearly on another podcast that I was listening to, where someone mentioned about, vetting operators. Another thing you can do is look at sites like, I think it was called Go Invest Clearly at the
Yeah.
time.
We didn't have the domain yet. Yeah.
Yeah.
That's awesome.
Yep. So it was a little while ago, but now it's Invest Clearly. And so, and I, got on the site, and then we started communicating. And so,
Yeah.
and I think what you're doing with Invest Clearly is phenomenal. In this space, it's like the Yelp for LPs that are in this private placement, commercial syndication, whatever term you want to use, space, and they're doing deals. And so, and I love how you verify. I had to send a couple different ways to show that, look, I
Yeah.
am in this deal. So I think it's great. So now that is a part of one of the things that I'll look and see what other people are saying there, because a lot of our world is referrals. You go to McDonald's, they're sending you on the receipt. Can you rate us and review us? Give us
Yeah. Right.
feedback. I mean,
Yeah.
you get bombarded with everybody wanting feedback for everything. Every Amazon package you get, they want feedback. Rate us on a 5-star. How was your delivery service? How did the DoorDash do? Everything. Everybody wants feedback. So I think it's great. And so that's how it started, and then just how it has evolved from there.
Awesome. Awesome. Thank you. That was a very nice endorsement. Thank you so much. So when you think about, and I just spoke to another LP recently that got started the exact same way. It was on those platforms, making small investment, and then evolved over time. When you think about when you first got started, has your maybe thesis or approach changed when you started versus now? Are you looking at maybe different risk profiles, different asset classes than when you first started and thought you want? Like, how has that evolved over time?
Truth be told, I think when I first started out, I didn't have a game plan of what I wanted. I just knew I wanted to be more hands off. The single family was a lot more work and a lot more active than what I had set out to do. And so I was looking for something a lot more hands off to handle all those day-to-day activities. So I don't really know if I had a plan or a goal in mind, like I want to invest in this market or I want to invest in this asset class. I think I just started looking at like I said, using the platforms. There's a lot of different operators and sponsors on there. I just started looking at the deals and kind of just comparing and contrasting and seeing, what the numbers looks like in multifamily versus industrial versus land, and, things, what it looked like, new development, and understanding how the deal worked, from a new development versus a value add. Yes, it's developed over time. I'm an insurance person, so I'm always, thinking about what is my risk profile, what is my risk tolerance. And so initially I didn't really have one, but now that have been looking at more deals and certainly investing in more deals, I've developed my risk tolerance and my risk profile, and it's really based on my comfort level, what I'm calling your risk tolerance and risk profile. And so for me, at the stage and phase of life that I'm in, I'm still in accumulation mode. You kind of go from accumulation to maybe then you start to transition later on, and then once you're really into retirement years, you kind of want steady Eddie, just steady cash flow. You're not looking to do these more speculative or more grandiose, more dramatic, sexy investments or whatnot. You kind of want slow and steady because you don't have the time should something go wrong to make it up. And so the risk profile, I'm a lot more riskier now just based on the phase and stage of life that I'm in. So I'm willing to take a little bit more higher risk on things. Of course, nobody wants to lose money. What they say, Buffett's rule number one, never lose money. And rule number two, rule number one, you never want to lose money. I don't want to lose, oh wow, I found $5 in my pocket. I could have been doing something with that $5. But I do take a lot. I have a higher risk tolerance level. I would just say, I don't want to say I take risks, I'm so risky or whatever, but I have a higher risk tolerance level just based on the phase and stage of life that I'm in. And that's going to differ for different folks. So, and that will change, 5 years from now, 10 years from now, and as, different things occur in life. So, yeah.
Yeah, awesome. And so we talked a little about vetting the operator, and we talked a little about your risk tolerance. Mm-hmm. When you shift more towards vetting the deal, like say the operator hits your marks, is there a certain thing you look for where that risk tolerance red flag goes off and you're like, I'm done? Or is it like a process? Like what sets off for you? I like the sponsor. Let's look at the investment. Yes or no from a pursuit standpoint.
So that's kind of twofold. So a lot what I like doing with a powerful fund and investing with an investment club is that I can have other thoughts and opinions on what other people see in deals as well, so that I may not even think about, to help make those decisions. And even where I may be like, yeah, this is a deal I want to do and want to do. If others in the club are like or whatnot, for valid reasons that they may bring up that I may think is no big deal or whatnot. I like that model because it helps me look at a deal from a different lens than I probably just would be looking at if I was just solo doing it all, just what I thought, what I saw, what I thought, because I'm going to always be biased to my own thoughts. Why? Because they're my thoughts. But your thoughts are different. And so I like doing it through the club model to where you're hearing opposition of thought. You're hearing someone else's perspective and someone else's view. And it kind of makes me look at things in a different way. So when I'm looking at an operator or vetting even their deal, some red flags, I would say a big one for me, and what I've caught and I found on a couple of deals recently this year, where they talk about the returns, and they're speaking on a return on capital, but really it's a return of capital, where they're taking kind of that initial capital and returning it to you and calling it a return. Well, returning back my money, yes, it's a return in the fact that you're returning it back to me, but it's not, I'm looking for the growth on that money, the return on the capital more than the return of the capital. So if knowing certain nuances in deals, having just reviewed so many at this point, and will 5 years from now will be even that much more quicker and sharper with it. I want to see clear, succinct, this is the fee, this is how this is the return, a true return, meaning growth on our capital, not just returning our initial investment and calling it a return, but a true growth on capital. I want to see them with skin in the game. I want to see them have some money into it. So if they're not having any money into it, I'm probably not going to do it, because, it's easy to take risk with other people's money because you're not out of anything. And also not just money, you're putting in your money from your fees, but actually your money in your bank account that you could be splurging on a vacation with. But no, you're putting it in this deal. So those are some things that I want to see in a deal, that you have your money in it, that you're not playing semantics with the words, like, oh, it's a return. But no, a return of my capital is not a return on my, I'm doing this for growth. I want my dollar to grow. I want it to Benjamin to come back greater than what he left me at. So just returning Benjamin right back to me, you're playing semantics and words, like it's a return. So because if you're doing it on that kind of, what I think, it may not be also common to everyone, but I think it's kind of a common thing to be able to be just transparent and straightforward about. What else in that 200-page PPM
Yeah.
am I not understanding with how you're really structuring this deal? We don't always get it right, but the goal is to try to, bob and weave and avoid landmines and go in with as much information as that we think that we understand and that we understand in doing these deals. So those are probably some of the red flags. It's like being just give it to me straight. Don't try to wrap it up and put lipstick on a pig and because it
Yeah.
sounds good to get the money. But let's talk, because if it's a good deal, it's a good deal. You don't have to finagle it and show it this way versus that, or oh yeah, I'm putting my money in, but it's the money from the fees that you got off the deal to put it in. So you don't have to do all that if it's really a great deal that you believe it's a great deal.
Sure. Yeah, absolutely. So tell us a little bit more. You mentioned, we talked about Power Pool Fund very, very briefly. Tell us like how it works. How do you guys work together? How do you make the investments? How do you do the evaluation? What is that whole, and just what is it like in general?
Yeah. So in general, it starts with me as the founder and the leader of the club. As the deals now, just come to my inbox, or if I'm out, trying to talking with other people that are the LPs that are doing deals and finding different operators and sponsors. And so we'll bring a deal to the club. I try to just do a diverse mix of debt and equity deals, and across the gamut of asset classes. You mentioned marinas earlier. We did just review and look at a marina deal. And so just bring into the club, bring their pitch, the operator's pitch deck. Sometimes we'll bring the operator on the call. Looking at, whatever they have to present, like they have a webinar. Sometimes they'll do a pre-recorded webinar that we can send out. And then we'll just jump on a call and start to talk about it. Going through their slide deck and asking questions, whether that's, direct to the operator on the call or just, through emailing back, just different questions that we may have based on their pitch deck. And things like that. So it really just starts with myself as the founder and leader of the club. Here's an opportunity. Here's a deal. I'm not an asset manager in the sense that I'm managing other people's money. It's more of here's an opportunity that's out there that you probably don't know about if you're not locked into this space. Let's talk about it. Let's review it. And see if we want to pool our money and invest in that deal. And so everyone kind of has to make their own decision for themselves, because it is their money. I can't tell you what to do with your money. You have to make that decision. So a pillar of the club is education. So we do different education topics around the real estate and in passive investing space to just make us that much more confident and knowledgeable as we're making decisions and reviewing deals. But then another part of it is we can't just sit on the sidelines. I use a lot of sports analogies. You're not going to get good at shooting free throws just by watching LeBron do it. You got to actually get out there and do it. And so that's the other part of the club is we're putting deals in front of you to actually put your money to work in real estate and see how it goes. Learn some lessons. What would you do differently next time? What did you like that you would continue to do every single time? You got to just get out there and start. Experience is the best teacher. And so that's really what we're doing in the club, is just putting deals in front of a group of people, and let's talk about them. Would we put our money to them? Would we not put our money with it? And learning along the way.
Yeah, that's great. That's great. So you are a mom, a full-time in insurance. You are a borderline full-time LP. You've got the club. You're investing at night, and it's impressive, right? It's pretty awesome. And I didn't bring up, but you were a Hall of Fame basketball player as well, which I know you meant. You brought up free throws for a few times. I'm far outside my world, but. Before we wrap up, I'd like to ask you the question that I love asking everybody on here is what part of passive investing do you think needs to die?
What part of passive investing that I think needs to die? I would say that you're going to do a deal and you're going to be rich. You're going to put your money in one or two deals or a couple deals, and you're going to put $50,000 in and get $1.5 million back. And it's going to just happen like that. And that's just so far from true, and it's a slow path. It's largely a time game. It really is. Like even with returns and distributions, and people say steady cash flow. Depending on, of course, the more in, the more out. But it is a really a slow game, and it's really a time game to building what I would say if you consider yourself just by being an LP wealthy in it. You're probably at a certain level of wealth if you're doing these deals in the first place. You're probably not a check to check type of person if you're even, investing $50,000 or whatnot into these deals out of the gate. But I would say that it's not going to be, one or a handful of deals and you're just retiring on it. So I would say it's a slow path to wealth. And I would also say that passive investing or investing in general, it's not, we either do this or we do that. It's multifamily all day long, or it's, the stock market all day long, or crypto's the way to go. It's not I don't think it's an either or. It's a this and. We do this and we do that. You invest in multifamily and in land. You invest in debt investments and in equity investments. I think thinking that it's just this one way is the way to success. There's so many ways to success. There's so many ways to make a lot of money. And I think looking at it holistically and not just I'm flipping. Flipping is the way to go. This is how you do it. Get an HGTV show. That's how to do it. That's great. But there's other ways to do it as well. And maybe you flip and you have, that's what say my club is for the busy professional. If you're a busy flipper, you can do, have passive income. If you're a coach and have your coaching courses or whatnot, you still have to sell that course in order to do that, to make the income and make that return. So, but you can also have that money working other ways as well. So it's not just a one trick pony, one way, one lane. There's all kinds of different ways. And so I think, it's a slow route to doing it, but you can do it, maybe that kind of rolls back to diversification, do more than one thing, and don't just think that this is the way to do it. Like there's lots of ways to do it. And so put a little bit of money in a lot of different things and then just watch that ship rise, or that wave rise, I should say.
Yeah. Awesome. Terra, it's always a pleasure talking to you. Awesome having you on. If people wanted to follow you, get in touch with you, become part of Power Pool Fund, how do they get in contact with you?
Yeah. So first they can follow us on all social media. So Facebook, Instagram at Power Pool Fund. And then also you can reach out at powerpoolfund.com is the website, or send me an email, info@powerpoolfund.com. So info@powerpoolfund.com.
Awesome. Thank you so much for joining.
Thank you so much, Pat. I loved it.
All right. Thanks for listening to the Invest Clearly podcast. To find verified investor reviews or to claim your GP profile, please visit investclearly.com. If you enjoyed this episode, please remember to like, subscribe, and leave a review, because that's how other people find the show. Till next time, invest clearly.